US stock market rallied back close to its highest levels on record as Wall Street worries about the conflict in the Middle East faded. A still fragile Israel-Iran ceasefire is also sending oil prices back to pre-conflict levels, though there is still some headline risk. Gold prices also slipped as investor jitters eased. The Dow soared 507 points at close yesterday, while the S&P 500 also was up 1.11%. Leading gains was the Nasdaq Composite, which advanced 1.43% as the artificial intelligence trade roared back. AI leader Nvidia stock soared 2.6% yesterday to $147.9 per share, ending the trading session at its highest level since its record close in January. Hello, welcome back to Global Business Insights, where we take a closer look at the main business headlines moving markets all over the world. Looking first at some data, in the US, consumer sentiment sank in June with the Conference Board's Consumer Confidence Index falling to 93 from 98.4 in May. The Present Situation Index also dropped by 6.4 points to 129.1, while the Expectations Index dropped 4.6 points to 69. Assessing the survey's findings, Stephanie Guichard, who is the senior economist, Global Indicators at the Conference Board, said consumers were less positive about current business conditions than May, adding that appraisal of current job availability weakened for the sixth consecutive month, but remained in positive territory. Donald Trump may have sparked more fears for NATO's future ahead of a two-day summit, as he commented that there could be numerous ways of defining responsibilities spelled out in the alliance's mutual defense pact. The US is also pushing for an increase in defense spend to 5% of GDP, as some countries like Spain balked at ability to meet this target. An unexpected announced Israel-Iran ceasefire remains fragile as both sides breached the announced truce amid what looks like a tentative commitment to wind down the tensions. A nuclear deal of sorts seemed to be perhaps the only way forward to end the nuclear threat, as intelligence remains unclear on the impact of US attacks on Iran's nuclear sites. It seems optimistic to expect the fragile truce to hold completely, but the new normal emerging is expected to be much more manageable, and so far the truce seems to be gaining ground, though, like we said, still fragile. Crude oil markets are betting on a return to being driven solely by fundamentals as risk premium significantly abated, based on the view that the Israel-Iran truce will stand. My thoughts are that you will still get slightly higher risk premium compared to before the 12-day war, associated with still lingering uncertainty. OPEC Plus is also expected to keep pushing supply. The US is removing barriers to ramping up production, and all this amid tepid economic growth. The Israel-Iran crisis has not materially moved the needle as far as energy markets are concerned, as the demand and supply dynamic continues to favor lower crude prices at sub-70 for Brent. Crude oil sank about 6%. That was yesterday, with Brent at under $68 a barrel.
What will actually happen with rates is going to depend on the path of the economy, and that's highly uncertain. So I would just say what that means at this moment in time is that a significant majority of the committee, but also there's a pretty significant minority that doesn't agree, but a significant majority feels it will be appropriate to reduce rates later this year. And what that means is that each of those persons who wrote down a cut in rates later this year, they think that there's some state of the world where inflation doesn't prove to be as high, or the labor market weakens, or some combination of those two things, that it will turn out to be more likely than not appropriate to reduce policy rates, subject to great uncertainty. I mean, we will the story has been evolving, and our thinking has been adapting, and that will continue.
Thank you. Chair Powell, although a ceasefire has been tentatively reached in the Middle East, the situation still has the potential to open global and energy markets, especially if the ceasefire is broken, while at this point Iran is seen as unlikely to close the Strait of Hormuz. That decision could change. How is the Fed assessing the current situation and incorporating those assessments as it considers future adjustment to economic projections and its stand on monetary policy?
So I think it's too early to to know what any economic implications might be, and I would not want to speculate. Like everyone else, we are, of course, watching the situation.
U.S. Federal Chair, in his testimony to the House Committee yesterday, suggested lower inflation and unemployment going up could mean cutting earlier than expected, adding that the June-July data will show more on impact of tariffs and will be instructive on what to do next. He said it's too early to know if Middle East crisis, as we've seen this de-escalation, will impact energy prices and inflation, reiterating that there is no need to rush to conclusions and make any new changes. Powell's prepared remarks did not vary materially from the previous narrative, but other FOMC members have been commenting. Federal Reserve Bank of New York President John Williams said he expects slower growth and higher inflation this year, due in large part to trade tariffs, and there is still no need to rush cuts to interest rates. Federal Reserve Bank of Boston President Susan Collins also said yesterday that policy is in the right place, while Atlanta Fed boss Bostic said the Fed has space and time to watch how the tariff and other policy debates evolve. But Fed Vice Chair for Supervision Michelle Bowman said she would consider voting for a rate cut as soon as July if inflation pressures remain contained. Fellow Governor Christopher Waller also on Friday said the Fed could consider cutting in July. The mood seems to be changing from uncertainty to that of divided opinions on the next monetary actions. Multidimensional reform in any context is daunting. We'll replay a chat for those who may have missed it with Mrs. Ifueko Omoigui Okauru, who is former executive chairman of Federal Inland Revenue Service and group CEO of the CPP Group. Mrs. Okauru has been involved in transformational change and played different change leadership and consulting roles in both public and private sectors.
Reform is challenging. The truth is we may want change, but we really seldom like change as humans. To make us change to where others want us to go to, where we want to go to. Let's give an example. I would love to be a swimmer. I don't know how many times I've tried to swim. Much as I like it, I'm yet to be a good swimmer or even a swimmer at all. So it's tough. It's tough even when you set your own personal goals. Not to talk of when you want to reform institutions. And the truth about reform is that it is centrally about people. You're reforming, but beyond people, you're also reforming systems that people are used to. You're reforming rules that people are used to. So even though you may center your reform on an institution, or you center your reform around rules, you want to change rules, or you center around if you want to change a physical building, people are involved. So let's talk about the building which is inanimate, because they could just destroy it, you change it, you do this. But hey, in doing all those things, there's certain standards you want to achieve. The people that would execute those standards will not do it to the particular point you want it to. Now, of course, in the realm of robots and AI, it gets a lot easier. But even then, whoever programs the AI, whoever programs the robot, if it's a robot, even programming the robot, it's easier. But again, as you see in AI, the right at the bottom, AI even makes mistakes. And so it has to learn and unlearn and unlearn. And so I think maybe that word learning is probably one of the reasons is actually very challenging. And that's where the difficulty is. And of course, in Nigeria, like I've mentioned in my article, where you have different beliefs, you have different perspectives, you have different views, you have different opinions, even made more difficult when you superimpose on that the belief systems and the way we think. So that's why it's difficult. It's not because it's Nigeria. It's just because where we are, how we are, the way we are, has made it a lot more difficult. How do we start to do small pilots that work? Just start. Just start. Again, have you thought about how when there's inertia, and you want to move something, it's difficult at the beginning, but just start. And then as you start rolling, you can start shaping it. And the reality about being overwhelming is accept it. One of the difficult things that we as human beings find difficult is accepting our reality. I don't know how long it took me to accept the reality of where I am, but even then, beyond the acceptance, I'm still working on it. There are certain things that shake me a little bit. I'm still working on it. But I think accepting our realities, perhaps also another tough thing that we need to bear in mind. And then perhaps another issue is, and these are things that teach us in school, is, when you want to do something, leave your ego at the door. Little things like ego could also factor in, nothing small. It's like surgery in the hospital. I'm waiting for a small surgery. It's not small. Small, big, same process. So let's work on ourselves first. Let's work on others. But starting with ourselves, narrow our expectations. Because again, part of it is also how we manage our expectations,
The price of cobalt jumped. That was on Monday after the world's biggest producer, the Democratic Republic of Congo, extended a ban on exports of the battery material. The metal, cobalt, which has dropped by about 60% in just over 3 years, rose almost 10% after the announcement by the DRC's Strategic Mineral Substances Market Regulator. DRC regulators say the 4-month cobalt export ban imposed in February would continue until September. The Moroccan Central Bank held its benchmark interest rate steady at 2.25%, saying current borrowing costs were consistent with the inflation outlook. The bank said in a statement that inflation is expected to average 1% in 2025, following a drop in food prices before ticking up to 1.8% next year. The South African rand reversed weeks of underperformance against the dollar. That was yesterday after a fragile ceasefire between Israel and Iran revived appetite for investments in emerging markets. The risk-sensitive local currency gained ground after falling to a 1-month low. That was on Monday. In Nigeria, the Senate has approved a fresh extension of the capital component of the 2024 national budget, shifting its implementation deadline to December 31st, 2025. The decision was reached during plenary yesterday following the presentation and swift passage of an amendment bill to the Appropriation Act. Fitch Ratings, in its latest Nigeria risk assessment, has commented that sustainable improvement in public finances, especially from more revenues and expanding of fiscal buffers, are areas that could lead to an upgrade in its assessment. Upgrade for Nigeria risk assessment has implications for cost of dollar borrowing. Asia Pacific markets closed higher as traders weighed a ceasefire between Israel and Iran and fresh commentary from the US Federal Reserve. European defense stocks also rallied as world leaders gather in The Hague for the annual NATO summit. The regional stocks aerospace and defense index, that's in Europe, opened up 1.2% higher. Well, that's all we have time for in this special edition of Global Business Insights. This is Bode Oshosami. Bye-bye.